Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Wednesday, March 15th, 2023. And our top story today, the Silicon Valley Bank fallout. We'll talk about the rescue plan and the impact to markets. And joining me now to discuss this and a lot more, Jane King is a financial journalist, and she's also the host of The Innovators with Jane King. Jane, great to see you. Thanks so much for joining us on the program this morning.
Oh, great to be back with you, Jeffrey.
Oh, it's always a pleasure. And I love your show, The Innovators with the aforementioned Jane King. Always a great program. And you always cover such have some great, interesting guests. Jane, this is not a great story, but it's one that I wanted to come to you about. And that's the tale of Silicon Valley Bank. You want to, and we're recording this on a Tuesday morning, so a lot could have happened between now and the air date tomorrow.
Right.
But as of this morning, where do we stand?
So, well, the bank was shut down by regulators, and they shut down the other bank, Signature Bank, which is a cryptocurrency-based bank. And I think, this is really a bigger story about inflation and what the Federal Reserve has been doing with interest rates. I understand that Silicon Valley Bank had a very large amount of treasuries that were underwater. Because they bought them when we had 0% interest rates, and now we're more than that. So they didn't have the backup. They were losing money on these things, and they had sold shares to try to boost that, and it was just really kind of a mismanaged mess. They were going without a risk assessment person for months that maybe would have been able to spot this and make some changes before things got really bad. But then what we saw Monday were all these regional banks that investors were just dumping. I mean, I think it looked like an overreaction. I mean, they were just thinking, oh, these banks are maybe the next ones that are going to collapse, or everybody's pulling their money out and putting it into Chase and Citi and Bank of America that are too big to fail, so to speak. So the regional banks got absolutely clobbered yesterday. They're recovering today. We'll see what happens. I feel like it's a day-to-day situation. And but it does speak to the Federal Reserve and what they're doing with interest rates and how they may need to slow down a little bit.
Yeah, and really good point. And I know we'll get into that in a few minutes. You know what I found really interesting about, you think about the velocity of money coming out of Silicon Valley Bank. And I think that someone did a comparison, and I can't give you who it was, so I don't have the proper attribution, but I think something to the tune of $42 billion flew out of that bank, but it was all electronically.
Yeah.
And that really kind of the balance here with being able to access your money, having access to that money electronically, but also being able to manage and pull that money out, that makes it very difficult for a bank to manage its deposits.
Well, that's right. I mean, when you think about, remember It's a Wonderful Life, and there's the run on the bank, and he's like, okay, will you take $20? Will you take $50? Or when people were waiting in line, this was like totally different, even from 2008.
Yeah.
When people stood in line outside, was it Standard Chartered that was in the UK, which was really kind of the first bank run that I saw in recent, memory. People stood in line and waited to get their money out. Everybody's digitally banking now, and they were just pulling it out and putting it somewhere else. The other thing that was interesting about the situation was the role of social media and how people were, there was all kinds of misinformation about Silicon Valley Bank, and that was, just hyping up the situation, increasing the panic, and that added to what the withdrawals that we saw. So I think these are all things that, the regulators are going to have to look at and deal with.
Yeah, and we're not one. I think the reason why we're doing this show a day or two after the event is we wanted to kind of let it marinate. We're not going to follow everyone else's perspective on this. And it's really hard to, we don't know what we don't know. We don't know what the regulator saw. We don't know what the bank executive, we think we know, but there's probably a lot of blame to go around, and we'll have to kind of see how that kind of shakes out. But, and I want to get to a lot of the market conversations in segment 2, but just going back to the central bank question, are central banks going to have to push the brake, and not just the Fed, but everywhere around the world? Are they going to have to push the brakes now on this interest rate hike, because they're so hell-bent, my word, on choking off inflation, but they're doing that and they're cutting down the velocity of the money. But look what happened.
mean, I would not want to be Jerome Powell right now. I
Or
mean, can
Colin
you
Powell,
imagine?
or Colin Powell.
Like, or Colin Powell, right?
Okay, he's
I
not
mean,
bad.
it's yeah. So just when you think about this pickle that they're in, and we did get an inflation number out today that was exactly as expected. So that was kind of a blessing that maybe gives them just a little bit of breathing room, that if they need to, maybe they were going to do a 0.5% hike. Maybe now they could do 25, or maybe they could take a break, or, it just gives them, I feel, if that number would have come in hotter than expected, that would have been really, really difficult for them. So, but then you've got your philosophy of like, look, they shouldn't be worried about this. They need to fight inflation and they need to stick with it. And it's going to be really interesting. This may be the most crucial Fed meeting that we've seen in quite some time when they meet next week.
Yeah, and let's talk a little bit before we go to commercial break, and let's kind of tee up the market segment. But if you're in your 401k, you're a long-term investor. And I think back to 2008, we all lived through that and the debacle there, and things bounced back. So what's the message here for a long-term investor, someone who buys and holds a stock, buys and holds a security, a mutual fund, an exchange traded fund? What's the message to take away from all that? Is this just a hiccup?
Well, I think you do stick with these stocks, because I think in the long term, we'll figure it out. This may be a tough few years, but if you're a long-term investor, I think you stick with it. I always like to kind of, especially at the beginning of the year, just look at my investments. I would even, probably even do it 2 or 3 times a year. Just see, do I, maybe I want some dividend things, that I don't have enough dividend, or maybe there's too much tech or whatever, kind of rebalance it. But I think, in the end, I think that this US market and some international markets, I think, will pay off.
Yeah, and I just go back and talk about history. The Great Depression, we recovered from that over time. It wasn't immediate. The financial crisis, we recovered over time. And this, as my Aunt Sylvia would say, rest her soul, this too shall pass. Jane, I need to take absolutely it will. Jane, I need to take a very quick break. When we come back, we'll talk about how markets are reacting. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're joined this morning by Jane King, financial journalist and the host of The Innovators with the aforementioned Jane King. Jane, thanks so much for staying with us this morning.
Sure. Glad to be here.
All right. So behind you, and people I think know this, you're coming to us live, or not live, recorded from the NASDAQ. And the NASDAQ tends to focus on some of these technology stocks, biotech stocks. What's been reaction specifically to those? Because they would have been at one point funded perhaps by a Silicon Valley bank or a signature bank or another bank like this.
That's right. Well, and they're kind of dealing with their own issues as well. So Meta is just announcing this morning they're cutting 10,000 jobs and they are going to not fill 5,000 open positions. So you're seeing a lot of these tech companies pull back on their spending. I mean, these are the wealthiest companies the planet has ever seen, trillions in value, and they're still cutting back. So we've heard from Google, we've heard from Meta, Twitter, of course, has cut their kind of their own situation. So I feel like these tech companies they grew so much during the pandemic, added jobs. Amazon is cutting jobs as well. So they've added jobs, they added warehouses, they added all these new things. They're just paring back and just being run more efficiently and more conservatively. So that's kind of a different situation. Even Apple is, they're looking to kind of not be so dependent on China and the supply chain there. So they're moving some of their production to India and Vietnam. So there's just a lot of change, I feel like, going on with these tech companies right now.
And is there concern, for pre-IPO companies? Again, you're at the NASDAQ, so you're focusing on existing listed companies, but is there concern like, where am I going to get capital to build my business? I mean, a lot of companies, not mine and not yours, but are funded through venture or private equity money that is invested. Where do you go if you can't go to a standard, not a Standard Charter, Silicon Valley or a signature bank? I don't know. I have Standard Chartered Bank. No offense, guys. Don't write me. I had them on the brain.
Yeah.
Where do you go?
Well, IPOs have dried up. We haven't seen a lot this year. We didn't see a lot last year. So they recognize that this is not a good time to come to the market. And I was talking to a venture capitalist last week who said, the game's changing. And it was always hard to get venture capital money. You hear these stories about Facebook and all this. It's very, very hard to get any money, let alone, a nice amount to grow a business from a venture capitalist. And they say that things are changing. Just the macro is everybody's getting more conservative. The inflation thing has weighed on them. The stock market and kind of the uncertainty with this, geopolitical tensions, all of that has caused everybody just to operate more conservatively right now. And I think we just have to kind of get used to this new normal, at least probably for the rest of 2023.
Jane, you mentioned the social media, how it created a brush fire. In segment one, we were talking about the brush fire around Silicon Valley Bank. I mean, does that concern you? I know I'll just be flat out and say the amount of information that is flowing on social media, and I hear about people like pulling their braces off using TikToks. And so it's not just financial, but it's all sorts of information. Does that concern you? There's in my opinion, a lot of disinformation, misinformation that you just get the wrong message without any basis. You can't get that in 240 characters or 30 seconds.
No, and I even heard that some of the people on social media that were talking about Silicon Valley Bank and how it was going to fail were short the stock. So not only were they spreading disinformation, they were making money off of it as well. So I like social media. I like to, I use different ones for different things. But you just have to have a skeptical eye. It's just so hard to tell what's true. When do you really have some good early information? And when is this, not to be believed? And I'm not sure what the solution is for that.
No, I think it's just being a better consumer of information. And probably, I mean, I know when I do my newsletter every morning, I read multiple sources. So I'm getting it from AP. I might be getting it from all these different sources that kind of piece together the story. And candidly, there are, people are going to have different perspectives. I think that's important. Last question, Jane. I think when we last talked, we talked about FTX, and to think about that right now, we don't know all the details, but very different. But what does this just say about our financial system with FTX? There was some fraud involved.
Yeah.
There's definitely some concerns here. And I know, speaking of influencers, I know Shaq, they were trying to serve Shaq some papers around FTX, and he was off the grid somewhere, so they couldn't even find him. Shaquille O'Neal.
Shaquille O'Neal, yeah. So, well, I think both of these situations really come down to regulators, and both were managed poorly, right? I mean, so I think, it's just I kind of have like this little bit of a radar that goes up when you've got a company like an FTX and they're all of a sudden hanging out with celebrities and stuff, and that always is kind of a red flag for me. So, I mean, I didn't sort of foresee the collapse, but I was always kind of like, I think this is a half BS company or whatever. I don't know. It seemed like it was trying too hard with the Tom Brady and all this stuff. But I think, regulators have got to do a better job of keeping an eye on this. Now, crypto really doesn't have hardly any regulation. They've talked about it. They've put it off. I feel like they need to do something there. They need to have some regulation for these companies. But Silicon Valley did have regulators, and I don't know, there was sleep or something. I'm not sure what happened there, but I think there's probably going to be a lot of hearings about the Silicon Valley.
Yeah, I mean, as if we didn't have enough hearings around social media, now we're going to have hearings about, of what the regulators knew, what they didn't know, what the FDIC knew. I mean, it's going to be a circus, as it usually is. Well, Jane, we're going to have to leave it there. This story clearly not over, but you know what? We can always count on Jane King to break it down for us. Jane, always great to see you. Thanks so much for joining us, and we look forward to having you back on the program again very soon. And that wraps up this episode of BRN AM. Have a topic of interest, somebody you think we should talk to, drop us a line. And don't forget, for all the latest curated news and lifestyle, wellness, finance, tech, so much more, all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? We'll visit our website and, of course, all of our streaming partners. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Tax audits, tax liens, wage garnishments.
Every day we hear stories like this about good folks who are simply struggling to pay their bills. Each of them are living a frightening IRS tax nightmare, and they are afraid it will destroy their lives.
I'm a divorced single mom, and my ex-husband left me and the kids with a lot of unpaid bills, including unpaid taxes. I was really starting to show my stress on my kids because the IRS had sent me a letter demanding a huge payment from me. I couldn't afford it. So then the IRS was threatening to garnish my wages. I'm already living paycheck to paycheck. That would have put me over the edge financially.
It truly seemed hopeless, but then a friend at work told her to call the tax relief line.
The people at the tax relief line, they told me about something called innocent spouse relief. They worked it out so that all of the taxes from my ex are not my problem. I don't know how that works, and I don't care. All I care about is that I don't owe the IRS a dime, and they are not going to take my paycheck.
Even if it seems hopeless, you should call the number on your screen right now. There is absolutely no cost for the call or the consultation. You are under no obligation. If you are worried that the IRS could garnish your wages, seize your assets, even take your home, call us right now. The Tax Relief Line is here to help you. Now you have a knowledgeable, professional team of tax experts that are ready to negotiate with the IRS and fight for you to save you money. The Tax Relief Line's professionals have successfully negotiated thousands of cases, reducing and sometimes even eliminating the tax debt for their clients. It's very easy to get started. Simply call the number on your screen right now. You don't have to live in fear anymore. The call and the consultation are free.